Evening, everybody. It's 6 o'clock, and this is your closing comment for Monday, the 10th, and it's video number 1488. And the chart on the screen, again, as usual, the dollar, higher high, higher low, closed up 39 cents on the day. So the question is, well, why is that so important? Well, it's pretty simple. Because when the dollar goes up like that, it generally means bonds are down and stocks are down, which is exactly what it meant today. The bonds were down, and remember that this was an electronic session. The bond market itself was closed today for the holiday, such as it is. So we were down about a point and a quarter, a little over that, but we had been as low as down over another dollar, I believe. Let's just take a look. I mean, we've come out of the bottom. Yep. New closing low. It was down as low as 123 and 21/32, so it closed pretty darn close to the low. Looks like about three-quarters of the way down on the range, maybe a little bit more. And it just does not show any sign of turning. I mean, we bounced here, got right up under the 20-day MA, and we turned down. Also, remember that there has been a channel that we've been following here. I mean, that's pretty impressive. And it's parallel to the 20-day MA. The 5-day tried to turn back up to the upside and then rolled over again today. That also had a major effect on gold, down $34 today. This was I was looking for a little bit of a move to the downside in the gold and silver so I could buy it. But again, here is the downtrend, the channel. We got right up to it and bounced off it not once, but three times last week before coming down. And now, closed, where to close? Closed 1675 with a low of 72 and a half. I could definitely see this at 1650, 1660. 1650, I'd probably want to take a look at it. I really wanted to buy the silver, mentioned it in the letter last night, but you can't buy silver when the metals are moving like this. Same situation, top of the channel again. Also coincident with the 38.2 fib retracement. And so I guess we're going to be looking at a trend line that comes through here around 1875. I don't expect it to get that far. I think 19, if it got down to $19, I would be a buyer of the AGQ. I just couldn't pull the trigger today because it showed no sign whatsoever of moving back up. Okay, interesting. Ford and GM. Ford this morning when I talked about it was 1164, down 56 cents. It did not recover at all. In fact, it got worse. Closed 1136, down 84 cents or 7%. GM did the same thing. It was down 7%, but it rallied a little to close 32.29. That was only down $1.33 or 4%. And again, it was down 7% during the day. What's interesting here is that they're now talking about going from a shortage of cars and trucks to a glut, and nobody can figure out why. Okay, it's easy to figure out why. When a Ford truck is $61,000 and people who are actually workmen, not weekend warriors, goes in to buy it, he can't afford it. It's just that simple. And I think you're going to see more than that. Rivian also this morning was down it had been as low as 31.30, um, but it closed the day today 31.48, down 247 or 7.3% on their massive recall of every vehicle they have produced and delivered. Um, the biggest weight in the market today really was the semis. Um, Down about 3.5%. To give you an idea of what that looks like, I'm going to go through this fast. I'm not going to show you the charts. We have NVIDIA, which last year was 346. This year, the high was 307. Currently, 116.70, down another $4. AMD, listen to Kramer. He'll tell you how great Lisa Su is, and how you can buy the stock anytime. He actually said that at about 140. The high for the year was 164 for the end of last year, 152 for this year. Closed today 57.81. 164 to under 60. Ambarella, which has had a great run. End of the year last year was 220. Currently 56.29, down 3/4. Qualcomm, a little bit better because they do a lot of phone business. And its high at the end of last year was 192. At this year, the high was 100. Pardon me, the low was 112, 192 to 112, which is a pretty serious hit. It's 40%. Closed the day 114.60, down $6.31 or 5.2%. And the SMH, which is the semi ETF that I follow, 318 to 182, down 41%. I mean, a major move. Jamie Dimon was talking at some sort of event in Europe. He's thinking that we're going to have as much as a 20% further move down. The UK, all of a sudden, they needed to double the size of their gilts rather than mark them to the market and take the hit for the pensions that run. The only good thing I can tell you about the pensions and interest rates are pensions don't work at 2 and 2.5 and 3% because the return is just not there. Up here at 6 and 7%, absolutely they work. And if you want to get into the fundamental reason for stocks versus bonds, when you're looking at stocks that have a 3 or 4 or even a 5% dividend, they look pretty darn attractive if the market's going higher. If the market's going lower, like it is right now, you could waste 2 or 3 years of income versus that dividend in the loss of equity, which gets to the point people buy bonds when they can get as much of a yield on bonds and have a higher degree of safety than buying common stock. And that's exactly what we're seeing here. When you can buy the 2-year for 4.3%, there's not a lot of reason to be in stocks while the market is falling. All right, everyone. As I said, energy down, oil down $1.50, not a big deal. The gold 1675 down 34, Bitcoin down 285 back to 19,125. The dollar up 38 cents, and bonds down about a point and a half. I'll be back in